So today's guest on the podcast is Rob Walling. Rob is a serial entrepreneur. He's an angel investor. He's an author, and he's a podcast host as well. He's the co-founder of the first startup accelerator designed for bootstrappers called Tiny Seed. He started and sold multiple companies. Most recently, and the most known, I think, is Trip, a company which actually I'm a client in one of my businesses to this day. He also wrote 3 books, including one on the works on bootstrapping startups. He's a co-host of a podcast called Startups for the Rest of Us, and he gives dozens of talks about startup conferences around the world. And he also co-founded one of the largest conferences for bootstrap entrepreneurs called MicroConf. So lots of topics to talk with Rob. Welcome to the show, dude.
Yeah, my pleasure, man. Thanks for having me on.
Yeah, I have a quick question to kick it off. You're involved in very different projects throughout your career, including public speaking, you're podcasting, you're writing books, you're building SaaS companies. Recently, you're building an accelerator. Which role do you enjoy the most out of all of those?
Yeah, it's a good question. I think I've enjoyed the teaching the most. And by teaching, I mean, I started blogging in 2005, wrote a book in 2009 and 10, podcasting in 2010, conference in 2011. That's been the most fun because it like is being part of a community and it's building a community, but it hasn't been the most lucrative. Like I make the cash from the companies that I start, and the companies then the software companies allow me to, they allow me the time to do that stuff because it's basically free or minimum wage typically to do that. It's allowed me the time, but also that's the experience that I can teach from. You know what I mean? As I've started company after company, I'll learn, and then I can then have good topics for another book or for the podcast or whatever. So definitely enjoy talking about it, probably more than doing it because there's so much agony in doing it. But if I wasn't doing it, you just don't have the experience, I think, to teach from.
So you like having both, like being a founder and actually like running a company and doing the teaching because you have more experience basically.
Yeah. And I like going back and forth too. I mean, being a founder is obviously, it's hard. Every time it's hard, and it gets easier in some ways, but it gets harder in other ways because you tend to up your own stakes as you do it. And then I like to take a break and take a deep breath and then be like, I'm going to do something relaxing, like write a book and do some public speaking, and then go back to the hard part, which is growing the companies.
Yeah, it makes me feel good because I'm also a founder. I'm in the process of founding a new company as well, but I'm also working on a podcast. So it's a good balance for myself as well, I guess. We can go back from here, and it would be great for people who don't really know you to hear more about your background and kind of your story to entrepreneurship.
Sure. Yeah, I mean, when I was a kid, I sold, typical entrepreneur, sold gum and comic books, in junior high. My family didn't have a lot of money, and so that was how I was to buy for my Walkman and the comics that I collected. But getting older, I learned how to code when I was a kid, and then became a software developer when I graduated college. After I worked for construction for 2 years, I was an electrician, and I was like, I don't want to be doing this in 10 years, and my dad did it for 40 years, but it was not the thing for me. And I saw that software development could be a way to get me out of that. So I became a salary developer during the .com boom, and that was super fun. It was great building stuff for other people and getting paid. I couldn't believe they were paying me to create things. I love building things. It's like, really? I show up every day and you pay me to be in this office, and this is so fun. But eventually, 2 years in, it's like, I'm so tired of building things for other people. So I started thinking, like, how can I get off the hamster wheel? How can I build something for myself, that I own long-term and I'm not trading dollars for hours? And I started trying to build and launch software products on the side. And most of them failed. This is early 2000s. There was no blueprint. There was no one talking about this. There were no podcasts on it. So I flailed around a lot. And eventually, I had some minor successes. Some of it was in software, little invoicing package that I got in the 2006 timeframe. And then I actually had an e-commerce site that sold beach towels. I had several ebooks and info products that I was marketing, and that allowed me to eventually leave the full-time rat race, or the hamster wheel. Allowed me for the first time in my life. I think it was like December of 2008, or maybe it was January 2009, to wake up in the morning and not have to work for anyone else, and for all the revenue to make my house payment was coming from products.
Mm-hmm. Very cool. So once you did move to being a full-time entrepreneur and you could quit your job, what do you do then? Which project you decided to tackle?
Oh man, that was so fun. That was one of the most memorable and best days
Why?
of my life, because I woke up and I got a cup of coffee and I sat down at my computer and I looked around and I was like, I don't have a boss. I don't have a client. This is unreal that I had this whole day. My wife went off to work and I dropped my son. He was 2 at daycare. And I was like, I literally have 8 hours in this house by myself and no one's telling me what to do. And it was the first time that had ever happened, and it was a moment that I will remember. And I actually got in the car and I drove to Barnes and Noble and I read books just because I was like, because I want to do this, this is like something I've dreamed of for my whole life. And then I came back and I got to work. And at the time I had a whole like portfolio of products. I had maybe 8 or 9 small products. Like I said, a couple ebooks, e-commerce, some software, and I was just cobbling together. And I mean, to give you perspective, I was making about, let's say, 10 grand a month in net profit. So about 120K, which I was living in Boston, and to live there, it's not cheap. But that was all I needed. I didn't need to make millions of dollars. I was semi-retired. I mean, I was working about 10 to 15 hours a week there for a few months until I got bored. And that's what happens eventually. You're a motivated person and I want to do interesting things. And so what I had essentially done was bought my own time out. I bought it so that I didn't have to work for anybody else. And then I started doing the interesting things. So this is 2008, 2009. I thought, you know what? I have enough experience and knowledge at this point. I had already been blogging and people kept asking me questions that were more questions than I could blog about. So that's when I wrote my book, was that time. I wrote my book on my own time because I owned my own time at that point. And that's when we started the podcast in 2010, again, because I had the time to do it. We started the conference in 2011 because, again, I had the time to devote to it. I wasn't working. If I had been working 9 to 5 that whole time, I would never have had the sheer volume of output during that time. So I took about 2 or 3 years there to really focus on that was the info, or not the info, the, what do I call it? The teaching. That's when I got really into the teaching.
Started
and then
teaching.
Yep, in the 2008 to 2011 range. And then in 2011, I kind of wanted to take a step up, and I acquired a SaaS app called HitTail from an owner. And that was where I wanted to level myself up, get to that next level of both income, but also next level of challenge, grow something to mid 6 figures or 7. That was kind of the goal when I did it in 2011.
Mm-hmm. Where did you actually find the app to buy it at the time?
Yeah, I looked all over. I mean, it took me a few months and I was I was on Flippa and I was on, which probably was still SitePoint at the time, but I was on Flippa. I was working my network. I was watching forums, I was doing all this stuff. And eventually I started cold emailing these old apps that I had seen on these kind of startup lists, big SaaS startup. So 2008, I would go to those lists. And since it was 2011, I was like, if they're still around, they're probably abandoned. And so that's what I did. I cold emailed maybe, I'd say between 50 and 75 companies. And I got about 5 or 6 replies. And some of them were, not a fit. And then one of them eventually I was able to acquire.
Why acquire something? Why not just write a code if you were a coder and write from
Totally.
scratch?
No, it's a good question. It's because building something from scratch takes forever. It is so painful. Even if you can write the code, and even if you know what you're doing, it takes you 12 to 18 months at least to build something people want. It's not fun. It's hard. That's the hard work. That's the hardest part, to be honest. Even experienced 3rd, 4th, 5th time founders, that's the hardest part. Because once you get to the point where it's like, oh, I have 50 customers and they're paying me $50 a month each and they love it. Now you're home free. From there, it's plug and chug, grind it out. You can grow the app to as big as the market will allow. But getting there's a huge amount of uncertainty and a lot of kind of agony. And so I just wanted to leapfrog that process, and get to product market fit, which is where you build something people want, get there faster. And I had the luxury. So, I talked about, I grew up working class. My first job, I made minimum wage. First job out of college, I made $17 an hour. So I didn't have money growing up, and we were kind of scraping by as I was doing things. But when I was working the day job, in the dot-com boom, I was also consulting at night, and I was just throwing all of that into a bank account. So by the end of a few years, I had $11,000 in a bank account, which is more money than I'd ever had. And I used that to buy .NET Invoice in 2006. Okay, so that was like my first thing that got me. I paid 10 or 11 grand for it, and I grew it. It was doing a few hundred a month, and I grew it to being about 3,000 or 4,000 a month, and that was a game changer for me. Of like, oh, this can work, right? So then that idea. So then I built some things and I acquired some other things. But by the time I got to Hittail in 2011, I was pretty sure I didn't want to build something from scratch. And I had saved up, I told you I was making 120K. I was paying my bills, and over the course of that several years, I had saved up $30,000, 35-ish. Again, more money than I'd ever seen. That's a tremendous amount of money. I'd always driven used cars. I had, always put 5% down on my homes. I mean, it wasn't like I was rolling in dough. It was a huge amount of money for me. But I bought Hittail for 30 grand. And I was like almost crying the night that I wired the money, because I was talking to my wife, and I was like, I don't know what I've just done. Like, I've basically put my business's life savings, everything I've worked for, I've just written a check for it. What if it doesn't work? So I was pretty scared about it, but it was nice that it put my back to the wall. It's good to have your back to the wall sometimes, because I would not give up, because I had a sunk cost of 30 grand. I had a sunk cost of years of savings. And that's where I went really, all in on Hittail.
Do you think it's one of the reasons it made work, because you had your back at the wall, and that's something that other great companies, other entrepreneurs are doing at times, putting their situation where they have to do it?
I think it helped me. Yeah. I think it helped that I didn't. So I've never taken out a second mortgage on my house to fund a startup. I've never taken credit card debt. I've never done things that I would consider risky to me, myself, or the well-being of my family. Never gone into massive debt. So I paid 30 grand in cash out of a bank account. The risk to me was that I lost it, and that would have been devastating, but it wouldn't have wrecked the family. But yeah, having my back to the wall meant that I couldn't get 2 months in and say, oh, well, I'm just going to shut this down, right? I hear founders saying that often, and it's like, no, this requires hard work, guys. And get in a position where, whether you need to put money on the table or whether you just theoretically tell yourself, my back is to the wall and I'm going to make this work. I do think that's something. I mean, I scrambled. I went from I was working 10 or 15 hours a week again. I had spurts where I was doing the 4-hour work week thing for about 8 months, and then I'd get bored and I'd work normal weeks, 30 to 40 hours. And by 2011, we had our second child, and I took about 8 or 10 months and I worked, 10 hours a week, 15 hours a week, and I was really bored. And so when I bought Hittail, I was all in on it, and I went from working 10 or 15 to 60-hour weeks. I was working days and then nights on it, and I was super into it. I made tons of progress. And then after that 2-month season, I just kind of cut it and said, I'm going to go back to normal work schedule. And so that was a big part of it. Is I was like, I have to make this work, and I have to make it work fast, right? And I think it was nice to have the luxury to be able to do that for a short season. I've never been one to work long hours. I don't believe in working long hours. I think it burns you out.
Do you see it as a cycle? Sometimes you work more and sometimes you work less in your experience?
That's exactly right.
Mm-hmm.
Yep. Cool. Especially when it's like, I tell people, some founders will be like, hey, I'm going to try to launch 2 or 3 products and grow them all at once. And it's like, no, I've never been able to do that. I have owned multiple products, but typically several of them are maintaining, and one I'm focused on and growing, and all the rest are just kind of spitting off cash, which is great. But they're either maintaining or declining. Growing multiple products at once without a whole staff and people to run it, very, very, very hard. So that's how I think about it, right? Is there's these seasons of investing that time and then working. Can't be afraid of hard work, but don't build your life around it. It comes at the beginning, it comes at the time when you're really trying to get things to fit, and when you're really trying to get traction, and then you can ease off a bit, and then you can take a deep breath for 2, 3, 4 months and then go back at it, and focus hard. That's the way I've done it, cyclical, like you said.
Yeah, I noticed as well myself. That's kind of how I do it. So you acquired the app. I'm curious, if right now you would have to start sort of from scratch, you'd build a new company. Since the initial period is this hustle and it's pretty hard, would you do it again, or would you just buy an existing product company, some business, and do it? How do you view this at your stage now?
Where I am, I've told my wife when I was talking about selling Drip when we were going to be acquired, I told her, I'm going to do something else after this, but I'm never going to start another one from scratch. Like I've done it too many times now. For me personally, it's just I get bored of doing the same thing over and over, and not learning. Like for me, it's like creating and learning are the two things that I need to be happy. And so creating is cool, but doing the same thing is not learning. It's not a new thing. So yeah, if I were going to start something, I would try to acquire it. And that's actually what before I looked at starting Tiny Seed. I had my eyes out there. I was going to acquire like a board game site. I was going to acquire, just different things that I thought would be fun to do. Starting from scratches, but that's not this, but I'm in a different position, right? I'm not young, scrappy, and hungry anymore, right? I'm not in my 20s. And if I were in my 20s today and had more time than money, then yeah, I would build something from scratch and I would hustle my ass off. I would do the same thing that I did, not quite 20 years ago, but almost, right? So I'm in a different place than where I was.
Mm-hmm. Yeah, no, it's something I'm wondering about because I sold a business of mine a year ago. It was about like 7-figure exit. I'm starting something new, and the start sucks, to be honest, right now. Like starting a new business, it's really much harder than taking an existing business and just scaling and growing it. That's my experience, at least.
Yep. And you think it's going to be easier the second time or the third time or the fourth time, and it's not. In some ways, like you have more money, you have more resources, you don't have to do it at night, you can do it in a day, but still, it's still the same struggle. And I find that you almost have this hubris of like, I'm a multi-time founder now, I know how to do this better. And it's hard to put in the hard work when, your back's not to the wall like it used to be. You're not trying to escape this job that you hate or, whatever.
Yeah, I feel the same. My back is sort of not against the wall as well because I'm not struggling financially because like I sold something versus when you have to do it. Yeah, and then you work hard and make it happen. Interesting.
Yeah.
Okay, so did you actually end up buying Drip, or it's something you also started from scratch?
Started from scratch. It's a good question. I started from scratch, and one thing was, as Hittail, I bought Hittail in 2011, turned it around by the beginning of 2012, and it was growing well. And it wound up getting into the kind of the mid 6 figures in annual run rate. It was a really lucrative SaaS app for me. It was a life changer. I went from making, like I said, 120K to making a lot more than that. And that was great. And it wasn't just about the money either. It was about kind of building the confidence in my abilities. It was building the experience, actual learnings. And it was, it was such a good experience. But it got to the point where it was a low price point tool. It had higher churn than I wanted. Google would accidentally almost kill it every 6 months, and I was thinking to myself, this is my livelihood now. What can I do to change this business to make it more stable? And I kind of struggled to really see that path. So we had built a little add-on just to help us with marketing that captured some emails and did autoresponders and stuff. And that was for Hittail, right? It helped generate more trials. And so I started thinking, what if we turn this into another little SaaS app on the side and make it into a little lifestyle business, 10, 20K a month? That's how it started. And I had a contractor who's a developer, and he went off and built that. And by the time we started building it, I was like, man, this is pretty cool. I think this could be its own thing. I think if we built it up, we could make it low churn. I think we could ask a lot of money for it, $50 a month or $100 a month, so that churn will be lower. I think that this could be a nice little 6-figure, business. And that's kind of the path it went down. And before long, I was more interested in doing Drip. Even in the early days before launch, I became more, it was the creative process, right? Of like, building the new novel thing, which can be dangerous, right? But I became more enamored with it than the existing business I was working on.
Did you have the intention to build a big company, and you had in your mind a picture of Drip being where it is today, or you just really got started something new which you're excited about?
No, yeah, it was, especially in the early days, for the first 6 months of building it, it was just, let's build a little neat utility, a tool that makes something easier, and let's see how far we can take it. And if we got to 20 or 30K a month, I was going to be like, yeah, no, this is good. But before long, you get pulled in, you get people using it, and then they're like, could you integrate with XYZ and then do an automation? And it's like, I don't really want to do that, and I would have these conversations with Derek, who was he was a contractor at the time, and then he became W2 later on. And then later on, I retroactively named him co-founder because he had been there for so long. And we would have these conversations about, do we want to build this? Like, do we actually want to go down this road of building an ESP and marketing automation and all that? And begrudgingly, got dragged into that. But it was a deliberate decision of like, man, this market is big and no one was doing a good job of it, right? This is 2012 when we started building, 2013 when we launched. It was Infusionsoft and Entreport and HubSpot and Marketo.
Yeah, lots of competitors.
There's no, but they were doing a poor job of it. They were super expensive. They were super clunky. They were hard to use. You paid $2,000 up front to get started. Sales process, it was like no one was doing a self-serve version of that. And it quickly became apparent that there was this huge gap in the market. MailChimp, Aweber, Constant Contact were kind of this base layer. And then there was a huge jump, and it was like Infusionsoft, $300 a month, HubSpot, $600 a month. All these other competitors were up here, and there was this big gap here. And that's right where we went.
Mm-hmm. So what made you stand out, do you think, in the first days, since there were really lots of competitors in the email marketing space?
We were way easier to use. We were less expensive. We were started at $50 a month. We had the integrations that our people wanted, that your audience. It's like they didn't care about integrations with Salesforce and I don't know, whatever, Marketo, HubSpot, Silverpop, blah, blah, blah. They cared about integrations with Stripe, with Shopify, with those kinds of tools. These new SaaS tool, Gumroad at the time. Later, we added a bunch of those, but it was like the tools that your audience and my audience use. People weren't integrating these one-click OAuth integrations that just suck in your information. And it's like, I have an email list, and I want to be able to integrate with Stripe. And then anytime anyone makes a purchase, I want to be able to tag that customer as a customer in my system. They're no longer a subscriber, now they're a customer. And I want to pull in their purchase information. That doesn't seem very hard today. That was virtually impossible in 2013. And so we wanted to make that like 2 or 3 clicks. So it was focusing on these use cases that info product sellers, e-commerce, and SaaS founders wanted, but it was hard to do with the tools. And then we were, better UX, right? Better usability and lower priced. And that's what we really focused on.
Interesting. So how were the first days? How was the product evolution in the beginning? Like, was it a straight line, you would say, to success, or were you struggling at that time?
A lot of struggles early on. I mean, we built for about 4 or 5 months, and it was just a very simple product. We got some early adopters in. I had an email list of maybe 1,000 people who were interested in the product. And as we pulled them in, they were kind of like, this is okay, but you need to build more stuff. And we kept building, adding on different, broadcast emails, and kind of just almost replicating like a MailChimp at the time, which was aggravating that we had to do that, but people wanted it. So then by the time we launched, I had about 3,400 people on an email list, launched to all of them, and revenue went up to about 7 or 8K monthly recurring. And that was fine, and I was happy with it first month. But now I'm like, all right, let's get to it. Let's kick the. This is the blueprint. Plug and chug. We're gonna just grow this thing up. Going to start growing $1 or $2 grand a month here on, and it didn't, and it was just stagnant. So I was sending traffic and trials in, and they were just churning out. And so it really plateaued about 10K a month, and we didn't have product market fit. We hadn't built anything that people desperately needed yet. It was really just this basic email thing, and people kept saying, you're not different. You're not different than MailChimp, who's cheap. And that's when I got a bunch of conversations with the existing customers and people that were churning, and said, why are you churning? What do you need? And a lot of people said, well, the product doesn't it isn't worth $50 a month. That was a big thing. And I started thinking, so we could lower the price, or we could ask the question, what would it need to do to be worth $50 a month, right? Aspirational pricing is what I say. I want to aspire to build a product that is $50 a month. And that price point is at a point where, typically the higher price point you go, the lower churn you have with SaaS. It's not a linear line, but that's the idea. So started asking, what would it need to do? And that was where I had people telling me, well, if you did some automations, if I could click a link and mark someone as a customer, if you could pull data in from Stripe and mark someone as a prospect or whatever, that's where we started building that. And within 3 or 4 months, it started turning itself around. And I stopped marketing. Churn went down, trials went up, trial to paid percentage went up. It was crazy. I have this graph that I did in a talk once, and it's like, look at this thing. That's what product market fit looks like. Like, that's what I tell people. You know it when you see it, because everything just spun, you know. But it took us, we launched, and it took us another 7 or 8 months to get there, to 3 or 4 months just to figure out what to build, and then 3 or 4 months just to build it. And it was agony, man. I mean, I was dumping money, basically. I was pulling all my money off of Hittail at that point and just dumping it into developer resources, you know. And it was, I didn't know if we were going to get to the end. Are we actually going to build something people want ever? You know, that was the concern. And eventually we did, and it's a success story. But it was not like I snapped my fingers and it was some Cinderella story, you know.
How many months was it from day one until product market fit, you would say?
Yeah, we broke ground on code in December 2012. And then I would say it was March or April of 2014. So what is that? 15 months? Yeah.
Something like
15,
this. So
16 months. Yeah.
what made you believe in it if you didn't really see the results and you didn't see something people love to get? What kept you going throughout this process?
Well, a couple things. One is, and this is something I think that early stage founders forget, is I was marketing the day that we started coding, right? Start marketing the day you start coding. I've written a blog post and a book called that. You can get it for free. Go to robwalling.com, enter your email. The book is free. It's a 170-page PDF. The idea is, the day that Derek started coding, I started running Facebook ads to a landing page. I started talking about it on podcasts. I started mentioning it in blog posts. I started just doing stuff to figure out what really should we build. I had a value proposition, but I didn't know exactly what to build. And I didn't, and I wanted to just build a list. And so by the time we were 2-3 months in, we had 500 people on a launch list who said, I want to hear when this launches. I'm interested in that. And then a few months later, it was 1,000. And a few months later, it was 2,000. You know, so that was good. If we'd had zero emails on a list, I would have felt much worse about it. So that helped. It also helped that I'd done it before, you know, and that I just had some confidence in myself. The first few times I launched a product, I had no confidence it was going to win, it was going to succeed, and I would shut it down too early. Also helped that I had money, you know, that I wasn't rich, but I had enough money to pay my bills and to kind of cover the expenses of the company. I wasn't working nights and weekends. You know, each of these things, this is the stair-step approach, right? Stair-step approach to bootstrapping is you start small, and you take typically a single traffic source, whether it's SEO or something out of an app store or WordPress, you know, plugin, or even Amazon, you know, Amazon or Shopify app store or whatever. And you have a single sale product, and maybe that only gets you to 2,000, 3,000 a month. That's cool. That's a great start. Makes your house payment. You can even live on that if you're, you know, a digital nomad living in Chiang Mai. And then do that another time or two. So now you have 2 or 3 WordPress plugins, but now you're making 5 to 10K a month, and you can just buy out all of your time. And then you take all that time, you take that experience, you take the confidence that you gain, you take some of that money, and then you step up again and you do what you want to do. Now, maybe that next thing is SaaS for you. Maybe it's not. Maybe it's some other type of recurring revenue, but that's what I did. And I've seen, you know, entrepreneurs, and I believe it takes longer, but it's a much more linear and more certain and repeatable path to getting to the point where you can build great businesses. And so that helped me in that trough of sorrow that I was in for that 15 months to look back and say, look, I've done this before, and I'm not, you know, scraping by. I was running low on cash. I was stressed during that time, but all that definitely helped me stay committed and keep pushing forward.
I do have one more question on the struggles you had. I think it's just really valuable because it's so easy to romanticize and think there are no struggles. I think Drip sold for 8 figures, from what I read
Not supposed
online.
to comment on that. Yeah.
About commenting, it's what I read online. Yep. But in one of your books, I read that you had a time when you hired 3 developers as you wanted to grow it, only to realize sometime you only had 45 days in your payroll, basically, to pay them all. Can you talk about that moment?
One of the biggest failures of my entrepreneurial career was that moment. What happened was we launched, we didn't have product market fit, and I thought that by having more developers, we could move faster and get there faster. Technically, that's true, but I hired these developers, and I had $120,000 in the bank, which again, as I've said, the most money I had ever seen, but it was coming off a hit tail. And I was using it as a war chest. And then a tax bill came through for like 50 or $60,000 for the previous year. And an angel investment I had agreed to do came through for 20 grand. And then some microconf expenses came through and I had forgotten about them. And that was 20 grand. And suddenly I had 45 days of runway. And I'm a bootstrapper. I've always been extremely capital efficient, extremely cash conservative. So I never gotten myself in a place where I had a burn rate, right? Burn rate is where your expenses are larger than your revenue. I'd always bootstrapped, and you have to be profitable every month, right, or break even. So I was stressed the heck out, man, and it took a toll on me. It was stressful for me. I was shitty at home. I was not present for my family. Like, it's one of my deepest regrets was there was about a 4 or 5 month period there where we went on a vacation. We actually went to Thailand, and I was like not present at all because I was worried the whole time about money. And I never want to you don't want to do that. And I never want to be in that place again in my life. I actually was going to take a loan for my 401k. I didn't. I did like an annual sale, like an annual prepay with Hittail, and generated like 10 or 15 in cash. I think I did like an AppSumo deal with my book and generated, 5 or 10K. I was just scraping to kind of make it. I believe I sold I had a little info product that was still sticking around. I sold that for 5 or 10K. I was doing what it took. And then drip revenue grew to cover it eventually. But it was really touch and go for several months there. And that sucks. Don't do that. Try to be better. And what the trip was is I had never had to manage cash flow. I'd never had to do that because I always had more money coming in than I was spending. And in this case, I just didn't do it well.
What advice would you give yourself at that time, knowing what you know right now?
Well, I mean, there's two things. One, I hired 3 developers. I should have only hired 2. That's hindsight. Perfect 2020. I could have afforded that. Number 2, product market fit is going to take longer than you want it to. I thought that I could get there in 2 or 3 months, and it took 6 or 8 from where we were at that point. The third one is I'm living this now. I'm living this advice now, and it's from that lesson that I learned. And it's going to work out. Like, stress less and troubleshoot more. You know what I mean? I was like paralyzed by the stress of the worry of, what if I run out of money? What if I have to lay people off? What if and to be honest, it would have sucked, but I would have survived. Again, I didn't have a second mortgage on the house. I didn't have credit card debt. The worst case in that scenario is that I would have had to lay 1 or 2 developers off and go backwards. And for some reason, that felt like a huge failure and devastating. But if you actually, when I'm saying it out loud, it's not the worst thing in the world. You know what I mean? So I should have been more realistic about saying, what is the worst case actually, and what will that bring about? How bad will that actually be? And when I say it out loud, it's not actually that bad. So I should have stressed less and just been more realistic, I think, instead of catastrophizing.
Did you find any ways throughout the years, since you're a founder and you're doing lots of things, to handle that stress when it does come over, regardless if it's like a realistic solution where it's really shit's gonna hit the fan or not?
Sure. Yeah. No, definitely. As I got along in Drip and then exited and then doing Tiny Seed now, I'm way less stressed than I have ever been. And it's totally a state of mind. I am doing more complex things now and more difficult things with bigger stakes and more negotiating and more all the stuff that I used to stress about. I'm doing more of that today than I ever have, and yet I'm less stressed. And the reason is that I have that mindset of, it's going to work out. What is the worst case in this scenario that this doesn't go the way we want to? I have a plan B, C, and a D all mapped out. I think that's the thing, is to not focus on there being one solution, fixed mindset versus growth mindset, right? Of like, I'm going to figure this out. And having that confidence didn't come naturally to me. I was not raised that way. I had to find it myself, and it took me I wish I had found it in my 20s, and I found it in my late 30s, And so, yeah, these days I'm much more relaxed with what I'm doing, even though the stakes are higher and the complexities are more.
I like it. It's something I'm asking myself many times. What is the worst case scenario? I noticed that it's really helping to dump it on paper. And then when I write it down, I realize, like,
Yep.
nothing's bad is going to happen. I'm going to have a roof over my head. I'm going to have food, but I'm not
Yep.
going to be lost in the streets.
That's
So
right.
yeah, it's a helpful exercise I do as well, which helps me with my
Yep.
stress.
Yep. And the thing, I woke up the other day all stressed out. All right, and I woke up and I checked email and I was making breakfast for the kids and I was stressed. And I had to I asked myself, why are you stressed? Why are you stressed right now? And I looked, or I kind of went back through my memory of the morning and I was like, I'm stressed about that one email that so and so sent me and it's hanging over my head. And I thought, this isn't that big of a deal. Like, just be realistic about this. It was someone, I don't know, a blog post we wrote wasn't going to be good and wasn't going to get published. And I was stressing about how we were going to revise it. And it's like, this is not a big issue. Why are you carrying this with you? And to just realistically say, I will get to that in 30 minutes. I'm going to put the kids on the bus and then I'll go revise it and it'll be done, and it's like trying to, not all stressors are that easily fixed, but I find that I naturally hang on to too many things. My wife is a clinical psychologist and she's read research that says salaried employees, there's been studies, salaried employees tend to have higher rates of depression and entrepreneurs tend to have higher rates of stress and anxiety. And so it's kind of like pick your poison. Do you want to be, depressed working a crappy day job, or do you want to be stressed as a founder? And for me, if I can create and learn, I'll take the stress and just learn to deal with it better. I mean, that's kind of been my approach.
Yeah, that's an interesting comparison.
I know.
So yeah, it could be great if we can talk a bit about what led to selling Drip. I mean, in the end of the day, I know you exited Drip, so maybe we can talk about that period a bit. Maybe kind of what led you there and how was it?
Yeah. So Drip started growing well. We hit product market fit. It started growing really well, faster than anything I'd ever worked on. And we started getting, on the lists. We were on the Mashables top 10 list of email marketing providers, and there's hundreds of them, We were on Datanize's list, so we were the number 11 was it marketing automation? I think we were the number 11 marketing automation provider by market share. We had raised zero funding and there were 5 of us. And we were working out of a closet in Fresno and all 10 of them before, ahead of us had raised tens of millions of dollars in funding. So we were just making a dent, in this area of the universe. So I was getting kind of weekly emails from venture capitalists, right? Which is not saying much. I mean, that's anybody who's building something eventually gets that. And then I started getting inbound interest in acquisitions. And so we got about five inbound. Well, no, it was more than that. But anyways, 5 that made it to a part where we even started talking about it over the course of about 18 months. During this time, I was thinking, I might want to raise an angel round, and we were kind of we weren't running short on cash, but the lack of cash was hurting our growth, basically. I couldn't hire fast enough to handle all the stuff. And so we were definitely a bootstrap company, growing in a venture funded space. And I was trying to make this decision with my co-founder of like, do we raise a round, take it to the next level, knowing that we're going to be 2, 3, 4, 5 more years into this, or what would an acquisition make sense? It allows us to take cash off the table. In certain instances, it allows us to keep working on Drip with more funding, and because we got acquired by Lead Pages and they had raised 38 million in funding. So it almost allowed us to do this weird reverse raise where we never had to raise any money, but we had venture funding at our disposal. We were able to take life-changing money off the table. So that was kind of the best of all the worlds. And we thought through it a lot, and the acquisition itself was agonizing. It was a bunch of, I stressed more about it than I should have. But in the end, it was a good call. It was a strategic sale, and they treated us really well, and I feel like it worked out for them as well.
Okay, so post-sale day, how do you feel and how long did it last?
Yeah, it was a huge relief. It's a trip to look at a bank account again and see more money than you've, to have these milestones. I've said it a few times, but it's like, that's more, $10,000, more money than I've ever seen, $30,000 more, 120. And then to see that, that next level and be like, wow, I can't even process this at this point. Like, I'm not going to go do something stupid by like spend it and buy a car or anything. But I mean, I was still driving a salvage title 2006 Buick Rendezvous that I'd paid $8,000 cash for, or $9,000 cash. Like that's just how I had always lived. And so to have that kind of life-changing money in the bank and be like, I don't actually need to work anymore. Aside from I need to work on Drip for now, because we've been acquired, but like after this, I can go do what I want. It was it's totally surreal. It doesn't hit you for a long time. But I was super happy, and it took me a few weeks to get over the stress of just the acquisition process. Was, you've heard it before, but it's due diligence and all that's pretty stressful.
Yeah, that's not fun at all for anyone who's going through it. So Tiny Seed, that's something which you started after you exit Drip. When did you start it, and can you talk more about what you're doing there?
Yeah. So Tiny Seed is the first startup accelerator designed for software founders who would typically bootstrap. I've been bootstrapping my whole life, never raised funding. I'm not anti-funding for sure, but I just think being capital efficient is the way to go. But what I've noticed is there are tons of bootstrap founders who are doing this nights and weekends slog, or they get to this 4,000 or 5,000 a month MRR, and they just don't have the time or the resources to get past it. They need some guidance, they need advice, and it's hard to find that, to find it and to push past that. And so I had thought back in 2011, right before I acquired Hittail, I wrote down in a notebook, why isn't there Y Combinator for bootstrappers? What would that look like? Because YC is great, but it's all this venture funded path, right? It's go raise a Series A, raise a Series B. Like that's the whole path. And I thought, why isn't there an accelerator that just says, let's build profitable businesses and we'll give you just enough money to kind of be capital efficient and to focus on the project, or if you're already working on it full time, to go hire somebody or invest in ads or whatever. So I didn't want to do it, didn't want to raise the money, probably didn't have the experience to do it at the time anyways. But then last year it came up again. I started talking about angel investments I was making, and someone said, I've been investing in small SaaS apps, and someone said, you should raise a fund and do more of this, because I kind of was tapped out in terms of the money that I wanted to invest. And I was like, man, I don't really want to raise a fund. It just sounds like a big headache. But then this guy came along, who's my co-founder now, Einar Volset. And he had kind of worked in the financial space and had said, I think we could raise money pretty easily for this. Let's talk about it. And so we raised a small fund, just a few $1,000,000. And, we write checks between 120 and 160K, depending on the team size. And we invest mostly in SaaS, subscription software. And we're trying to, it's the same thing I've been trying to help people do for 14 years now. It's like, how can I help more people build businesses that bring them freedom? And if you want to bootstrap, that's great. I still think that's a great use case for 80% of people. 90% of people. But if you need a little help, that's what Tiny Seed is. So we run a batch. It's all fully remote, and we run a batch of about 8 or 10 companies, and we're maybe 2-3 weeks into our first batch right now. It's going well so far.
Why not pursue a new company? I mean, why not either acquire or start a new company? Why do something of this, which sounds like a very different model?
No, it's a good question. Starting a new one, I don't want to do, because I've done it enough, and it doesn't sound interesting to me. Acquiring was on my radar for a while, and I batted it back and forth. I think I've burned out a little bit. I mean, I've been doing SaaS in one form or another, and I've been running software companies since 2006 or 7. I mean, it's like 12, 13 years. I wasn't doing it full time, right? I was consulting during the day and then doing some of that at night, or a lot of it at night. But for me, it's time to a change. I feel like I've learned a lot, learned most of what I can from that experience. And I kind of want to double down on the other stuff that I've built, which is an audience and a conference and all that have all been my side project that I'm doing on the side as I'm building these companies. And I thought, what if I can actually help those people more than just, right now I give advice on a podcast, I give advice in a book and a blog, and then I throw a conference to get people together to hear more advice and to build community in that. But there's more to it. You know what I mean? What's the next level of that? Well, it's actually building a cohort and nurturing them for a year, and maybe even giving them money if they need it. And that's really what Tiny Seed came out of, is this, for some reason, this desire that I have to be part of this community and to help more people achieve this. This has been life-changing for me. Absolutely life-changing, to have the ability to start these companies and not work the 9 to 5, and to be present when my kids were born, and to take months off, and to travel, to take the kids to Europe once a year for a month. And, this is stuff my parents never did, and I never could have if it hadn't been for the businesses that I've been able to build. And I've been spreading the gospel of this for well more than a decade, and I feel like, yeah, I feel like I want to continue to be part of that. So
Interesting. When did you start, Tiny Seed?
it was about a year ago. Yeah, about a year ago. And it would, but it was just a slide deck at first, right? Because it was like, are investors even going to write checks for this, right? Because most people who invest, people in funds and whatever who invest in venture capital, they have a very specific thing. They want the big hits. They want the Dropbox, the Google, the Facebooks. They don't care about these small companies. So my first hypothesis that we had to disprove was like, will people even write checks for this? The second thing was, do bootstrappers even want to raise money? Or is it such against the culture that they don't want to? And so we had to prove those out, right? I made an announcement, put a landing page up per the usual, and got several thousand emails from founders who were like, yes, I would do this if you come up with the money. And in the process, we started talking to people about let's do this, let's do it differently. We don't expect you to do a Series A. We can all live on dividends. You don't need to sell. You can just do dividends. You can be remote. You can be capital efficient. We're not going to force you to hire. It's really is this second wave, I believe, of funding that's really different than VC. And it's about building sustainable, profitable businesses and not killing yourself while you're doing it, right? Not running yourself into the ground or burning out. It's like building a sane startup where you do what I did. You have some periods of really hard work, but most of the time you're valuing yourself, your lifestyle, and your family over your business.
Is there anyone else doing something similar to the idea of what Tiny Seed is up doing?
There are no accelerators that are doing what we're doing. There is a fund called Indie.vc that is an arm of a venture fund, and they have funded a handful of companies, I believe. They've been around 3 years or so, and I believe they've funded less than 20 companies, and they go later stage. So they might go at 20K MRR and up or something, and we're earlier than that. We want people to have some traction, have some MRR, but that's monthly recurring revenue. But we will take people, earlier than 20K. But there is there is this alternative funding space that's kind of building up. There's some debt-based financing that's coming out from Bigfoot Capital and Ladder Capital. So I do think that this is, and some of the terms are good and some are not. You gotta let your mileage may vary, but I've tried to build it such that it's super founder friendly, just because I've been a founder my whole life and I don't have any desire to do anything other than that.
Yeah, that's interesting. I interviewed Rand Fishkin on the podcast. So he also raised a very similar round with SparkToro, one of his new startups, and he had bad experience with Moz raising the typical venture capital model, which you hear a lot. And it seems like a really different model and getting more popular out there, I think.
Yes. So two funny bits. Number one, I'm an investor in SparkToro. It was one of my angel investments. Two, we basically Rand open sourced his terms. We took his terms and adopted them as the Tiny Seed terms. It's almost identical. It's you raise, you set a salary cap for the CEO or the founders, and anything above that they take out is dividends, and you share in the dividends based on your pro rata ownership. So if you give up single digit or low double digit percentage of your company, then it's just a fair, kind of a fair share to everybody. So we think it's a good model, and one that Rand kind of came up with himself. So almost by definition, it's founder friendly. It's like he's not going to come up with crappy terms for himself, for his own startup, after having, had a bad reasons. We talked to him. He's an investor. He's a mentor in Tiny Seed as well. We got a pretty good list. tinyseed.com/people. If you want to see the mentor list, it's pretty good. I've been very, very pleased with it. It's Jason Fried and DHH and Chris Savage and Rand and a lot of folks.
Very cool. Rob, we are running up on time. Do you have maybe a message you can deliver to anyone listening in who is still with us? Something encompassing from everything we talked about, which you want to share?
I think two things. One, it's gonna be a longer journey, and it's gonna be a harder journey than you want it to be. I had hoped that I could be, financially independent in 2 or 3 years, and it took me a lot longer than that. But if it were easy, everyone would do it. And sticking through the hard times and really staying focused, I think is showing up every day is anything I've built in my life that's great. it's from doing that. Our podcast was awful at the start and no one listened to it. And now here we are with tens of thousands of listeners, but it's 9 years later, but we shipped every week for 9 years to get to that point. So don't expect overnight success. I often say I'm 10 years or 12 years to overnight success. I mean, that's the reality of it.
Yeah, very cool. Rob, where can people find you online? And maybe you can share who Tiny Seed is for, if anyone listening in and may be interested in what you're offering there.
Sure. Yeah, if you enjoy listening to podcasts, you enjoy hearing people geek out about bootstrap startups, I ship a podcast every week, Startups for the Rest of Us, and it's .com, or you can go to iTunes or Stitcher or whatever. My site, where I have all my other stuff about my conferences, such as at robwalling.com, just my name. And yeah, Tiny Seed is for subscription software people. So SaaS, there's subscription marketplaces, that kind of stuff. If you have a bit of traction, you have a product that people are using, come check us out. We do applications twice a year, and we'll be opening that up probably later this year, early next year.
Mm-hmm. Very cool. I'll add links to all of those in the show notes for anyone listening in, and also add links to anything we discussed kind of throughout the call. So Rob, thank you very much for taking the time and coming to the show today.
Absolutely. My pleasure, man.
My pleasure. Take care.